I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Eric Hadik, president of InsideTrack.com. Welcome back to the show, Eric.
Oh, great to be back. Thanks for having me, Jim.
Are people nervous in the equity markets right now when September, October, November are always the months where major changes seem to happen?
Yeah, I think there is some anxiety out there, especially with the market really going nowhere for the last couple months, really since the surge off of the Brexit vote. The market's pretty much consolidated near their highs since about mid-July. So I think it is definitely creating a little bit of uncertainty, especially like when you said, as you said, there's always that September omen hanging over the market.
Is there any reason not to believe that something's going to happen?
From my work, from a technical and cyclical perspective, I do think we're going to see a sell-off here, but I think it has the potential to kind of fake investors out a little bit. And what I mean by that, in fact, to put it into context, I should quickly recap what I've been talking about the last 2 years, and that is that I thought the indices, the equity markets, from a broad perspective, would go through a major topping phase in 2015 and 2016. That is, among many other things, the culmination of a 40-year cycle of inflationary stock market advances since late 74, early 75. There's a lot of other cycles and indicators come into play that I thought we would see a topping phase through this 2-year period, but that the actual downturn, or a convincing downturn, would not take hold until late 2016. And one of the additional comparisons that I was discussing is that I thought that this market, at least the first year or two after the peak, would be similar to 2000, 2001, even into 2002, where you saw, particularly if you're looking at the Dow Industrials, during that time the NASDAQ was plummeting, you had the dot-com bubble bursting, but the other indices, like the Dow Industrials, topped in January of 2000, and all it saw for the next 16 to 18 months was a sequence of 2 to 3 month sharp sell-offs that would get the bears all worked up, and then immediately a 1 to 3 month rally that would take them almost back up to the previous high. And you just saw that volatility and that vacillation go on until the third quarter of 2001, and then additional market stresses like 9/11 and even some things in early 2002 started to give a little more life to that bear market and take them down into late 2002. And I was expecting to see something similar, not exactly, but a similar pattern in 2015, 2016, and then late 2016 would be somewhat comparable to third quarter of 2001, where the selling starts to take hold a little bit more, get a little more traction, and you get more believers out there that, this is a bear market that we're transitioning into. So I am looking at the coming months as a time when that's going to take hold, but there are some other more intermediate weekly and monthly cycles that I've been discussing that told me to look for kind of a two-phase drop starting in mid to late August, that we would see an initial sell-off probably into late September, early October. That would probably get your bulls, kind of remove the anxiety from them. They see a sell-off, maybe it's a 5+% drop, and then everyone start talking about, October, there's so many important bottoms in October, it's time to get back on board, and maybe we see a little bounce, but then I expect a bit of a more convincing sell-off from mid-October into late November. So I think that it's going to fulfill some of what the masses are expecting, but then throw a curveball at them shortly afterwards.
And how big will this November sell-off be? It sounds like it'll be gradual, but perhaps a big drop over that period?
I think it will be, because I think it's the early stages of something bigger. It doesn't have to all occur during that phase, but I do think that we're going to see something comparable to what we've seen in the last year or two with the sell-offs we saw back in August of 2015 and even January of 2016. But the action between now and mid-October, the initial sell-off, if it materializes as I'm expecting, and then the ensuing bounce, that action would really hone my expectations for how deep of a drop we could see after that. So the specifics on the late November drop from my work are not yet set in stone, so to speak. But I am going to be watching pretty closely the action of the next 3 to 4 weeks, where I think I'll start to get a better idea of what to expect subsequently.
One of Canada's major banks has predicted that Canada's growth rate next year will not be 2.1% as they predicted, but 1.8%. Would that go along with your chart?
Well, I don't know about specifically where Canada and Canada's banks are concerned, but from an overall perspective, absolutely. And I have been talking about something that's kind of a parallel there when you talk about the bank and banking stocks. I've been talking about what I expect another crisis in the euro in the next year, 1 to 2 years. And one of the things that I really elaborated in a couple of my recent Inside Track monthly newsletters was the different individual crises that are already emerging, and many of them have to do with European banks and bank stocks. And you've got a developing crisis in Spain and Spanish banks, and a particular ruling on floor clauses that came out earlier this year that's just exacerbating their situation. You've got a developing crisis with Italian banks and somewhere around 360 billion euros in non-performing loans, and a parallel similar crisis developing in Portuguese banks, also with non-performing loans starting to accelerate, or the size of them is growing. And one of the stocks that I think really illustrates, one of the indexes that really illustrates the just what's been going on in the last 6 to 8 years, and really just in the last 1 to 2 years, is the stocks, STOXX 600 European Bank Index. And when you look at that, and when you look at the individual stocks of a lot of those banks, it is just amazing how much they have dropped not only since 2008, and they are continuing to decline. Many of them and the index itself have lost between 70 and 90% of their peak 2008 value and have not rebounded to any large extent from any of the lows. But even just since mid-2015, there are many of them and the index that have lost 50% or more. The index itself was up around 160 last year and is now trading in around 80. You look at some of these key Spanish bank stocks that have lost 90% of their value in the last 7 to 8 years and 60% of their value just in the last 1 to 2 years. There is a developing crisis out there, and I compare it kind of to a perfect storm, that you've got these individual fronts that on different horizons that are, they're their own individual concern, but my conclusion, my expectation is that they are going to merge and it will be like a perfect storm coming together. And even your Brexit vote is just another kind of straw on that camel's back, if I can jump analogies here, but pushing the whole system that much closer to a full-blown crisis. And they talk about some of the real estate markets in London following the Brexit vote. They saw an initial sharp sell-off. Now they have rebounded since then, but that's a perfect wave structure coming off of a high. You get an initial sell-off, you get a bounce, everyone kind of disregards what happened previously, thinks that you've bottomed and you're ready to head back up, but then you get a second sell-off, which is usually the accelerated one. And so you've got all of that coming together, and then you have just a few months ago the IMF coming out and warning that Germany's Deutsche Bank is the greatest threat to the global financial system out there, and the struggles that they are having. So you can't just compartmentalize it and say, oh, it's just one bank here or one country here. When you've got some of the stalwarts and some of the secondary nations all experiencing the same thing, it's just going to take one more shock going through the market to suddenly get them all falling in sync.
We'll have more with Eric Hadik right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Eric Hadik. Eric, if the banks in Europe are in terrible trouble, what's that going to do to gold and silver?
I think that ultimately it will create an increased demand for gold and silver. And my scenario all along from a 3 to 5 year perspective for gold and silver was that we would bottom out in late 2015 and that we would see the first sustained rally in gold and silver, and I was looking for something around a 6-month duration in the first half of 2016, and that would kind of be your signal that the tide is turning, that a bottom is in place. But from there, I expected to see a multi-month correction from mid-2016. And then a secondary, a higher low or bottom in the fourth quarter of 2016. My work is starting to really home in on some specific cycles for when I think that bottom and where I think that bottom is most likely. But then from there, I think that gold and silver are going to enter a more accelerated, more dynamic up move in the very end of 2016 and then through 2017 and 2018. And from a wave perspective, or anyone familiar with Elliott wave, that's the third wave, the more convincing advance. It's even comparable on a bullish perspective to what I just mentioned from a bearish perspective when I was referencing the London real estate, where you get an initial drop, then a bounce, then your next drop is a third wave to the downside. Here in gold and silver, you've got the initial rally, pullback, and then that next rally is the third wave, the one that you really want to be on board. And I think that there is a key time frame when you want to make sure you're on board for that. And it wouldn't surprise me if a renewed euro crisis is at least one of the fundamental factors driving that.
How does the U.S. election cycle work into this?
Well, that's one of the things that's been really intriguing to me, is that there are different markets coming from different perspectives, different cycles, but all of which are focused on different times in November of this year. And I was even mentioning with stock indices why I think you'll see a second drop into late November. So all of these things overlapping November, which, in this year, I say to myself, okay, could this be triggered by something with the election? And, I'm not discounting anything right now where the election's concerned. When you have an entity like Julian Assange and WikiLeaks threatening that there is still a lot more that they're going to release before the election, you don't know what kind of smoking gun could suddenly appear, or a perceived smoking gun. Even if it's not as valid as you think it is, it's all about perception. And if something really came out where Clinton is concerned, and I don't discount the fact that, you could get more things that really discredit Trump in there too. And, what are the possibilities that as both of them pummel each other and outside forces try to pummel them, what is that going to result in the final weeks coming into the election? And I'm looking for a lot of uncertainty and a lot of volatility leading into and out of the election cycle.
Eric, thank you so much for chatting with us.
Oh, thanks very much for having me back, Jim.
My guest has been Eric Hadik, president of InsideTrack.com, Inside spelled INSIIDE. You're listening to HowStreet.com radio. You can find us on Twitter at Talk Digital Net, our YouTube channel, Talk Digital Network. Questions for the show can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.